Most people spend hours comparing insurance quotes and end up just buying the wrong policy. In fact, the biggest mistake isn't choosing the wrong company, it's not knowing what you're actually buying. And that mistake can cost you thousands of dollars, especially when you file a claim. So before you buy another policy, let me show you what most people get wrong. So this is why people overpay. When most people shop for insurance, they focus on one thing: price. They pull up three quotes, see 120, 190, and 240, and immediately buy the cheapest one. But here's the problem: a cheaper quote doesn't necessarily mean you're getting the same coverage. The first thing I'm going to show you today could save you from buying a cheap policy that could be very expensive later. Mistake number one: comparing price instead of coverage. Imagine two policies. Policy A, $150 a month. Policy B, $220 a month. Most people immediately choose policy A. But if policy A has state minimum liability, $2,000 deductible, no rental coverage, and policy B has higher liability limits, a $500 deductible, and rental reimbursement, now they're not even the same product anymore. Apples to apples, this is one of the biggest mistakes people make when they're shopping. So here's a go nugget: before you compare prices, first start with comparing coverages. Which coverage is the most important, and then keep those coverages the same with each quote that you look at. So never compare quote to quote unless the coverages are the same. That's how you get a good idea if the price is worth it. Mistake number two: buying state minimum limits. This one surprises a lot of people. Just because the state says it's enough insurance doesn't mean it's enough protection. Let's say you cause a serious accident. What happens if the damages exceed the policy limits? You may be responsible to pay the difference. That's why minimum coverage and adequate coverage aren't always the same thing. The goal isn't finding the cheapest policy, it's finding the cheapest policy that still protects your financial future. Let's say you cause a serious accident. With medical expenses, they escalate very quickly, depending on the type and just how extensive it could be. Minor injuries could vary anywhere from $500 to $10,000 on average. And then just major injuries like severe and disability, that could range anywhere from 155 to over a couple million. Now, state minimum limits are only able to cover bare minimum, and in most cases, it's not enough. For example, let's say you're driving and you end up hitting an SUV. Let's be honest, SUVs nowadays typically could be easily over 50,000. Now, at least in the state of Texas, for property damage, we're only able to cover up to 25,000 for state minimum limits. So that means that if you had an SUV, you're responsible for the difference. So that means that technically we're only going to cover up to 25,000 in property damage. And then you're going to be responsible for up to 25,000, if not more, depending on how severe the accident is and if the vehicle's totaled. So that means technically people could sue you. And now you could say, well, what money are they going to take? So that's the key. People are willing to take your future wages. They're willing to take up to 30% of what you make. Still, that's something that you don't want to go through, especially if you just take the time to look for the protection to prevent any gaps in coverage, any financial risk. So imagine being responsible for the property damage on an SUV and also someone's medical expenses. And imagine your insurance is only able to cover the state limits. So that means that if your insurance covers only, let's say, overall 60,000 in medical expenses, and it's a severe accident, technically, let's say it's over 100,000 in medical expenses, you're responsible for that difference, plus the property damage as well. So you're ended up having to pay just thousands and thousands of dollars out of pocket, hoping the insurance company's gonna cover it. In reality, like I mentioned, they're going to want your future wages. Even if you can't pay it now, even if you don't have any money to pay it, they will find a way to get their money back. All right, so mistake number three: not understanding deductibles. Would you rather want to save an extra $15 a month or have an extra $500 available when your car gets damaged? That's basically what you're deciding when you get a deductible. A higher deductible often lowers your premium, but also means you're responsible for more out of pocket when something happens. You're taking on more risk when you have a higher deductible and a lower premium. Your deductible shouldn't be based on what sounds good, but what you can afford tomorrow, especially in the future. Because insurance is based off protecting you for future exposures. So, can you afford to pay $1,000 out of pocket? But the trade off is, hey, you get a lower premium versus you pay a $500 deductible, but hey, it's a little bit more of a premium. So, that's kind of the question you need to ask yourself. Do you want to pay more? Do you want to handle more of the risk later on? Or do you want the insurance company to handle more of the risk? Mistake number four, thinking full coverage means everything. Now, full coverage, that phrase, it gets tossed around a lot. A lot of people get confused. They think that it protects you for every little thing when it comes to auto insurance. In reality, it doesn't. It's based on how much you want to be protected. In reality, there's not actually a policy for auto insurance that even says full coverage. It's based on select coverages that protect you in different situations. Usually, people mean liability, collision, and comprehensive. And even then, exclusions still exist. Ask what is covered and what isn't covered. Mistake number five, getting only one quote. Imagine buying a house and only looking at that one home. Sounds ridiculous, right? People do that with insurance every day. Different companies value risk differently. One company, they may love your profile. Another company may just hate it. That could be hundreds, if not thousands of dollars when it comes to the difference in price. One quote tells you the price, multiple quotes tell you the market. Here's 5 steps on how to shop for insurance. Step one, choose coverage first. What coverage is most important to you that you want to have on every single quote? Step two, choose deductibles. How much can you afford to pay out of pocket? How much risk can you take? Either a $500 deductible or a $1,000 deductible. Step three, get multiple quotes. Step four, compare identical coverages. Don't go to one company and get a lower price until you actually see the coverages are the same. Then compare the price after. Step five, ask about discounts. That can make a big difference. If you remember nothing else from this video, remember this. The cheapest quote is not always the cheapest insurance. The best policy is the one that gives you the protection you need at the price that you're comfortable with. And if you can learn that before an accident happens, you'll be ahead of most drivers. You'll be ahead of 99% of drivers. And if you're not sure, if you're overpaying, or if your policy just doesn't make sense, I'll leave resources in the description to help you review your policy. Because the goal isn't cheaper insurance, it's having insurance that will protect you at the price that you're comfortable with.